So I'm super excited. We are the last group before a well-deserved break, but I got to pick one panel to host for that Upfront Summit, and I chose talking about Softbank and the Vision Fund. So super excited to have Lydia and Colin. Lydia literally flew in from Asia and is heading to London tonight. And Colin has just got back as well. You're in Europe as well. So super excited, very topical. For those of you who don't know, I'm Greg Bettinelli, a partner here at Upfront. And I don't think there's a firm or entity that has come onto the scene in a faster, more impactful way than what's going on with Softbank's Vision Fund. And this is an opportunity for us to learn a little bit more. So my first question is, what the hell? Lydia, like, what are you doing? It's kind of like the Bank of Masa, and it's all coming. I'm sarcastic, but give us a little bit of idea of the vision of the Vision Fund, how long you've been with Softbank prior to being here as well. So I love the narrative. And then Colin, who's been about 6 to 9 months or so, kind of coming in and from the banking side to get a little narrative of what's going on and how we should all be excited.
Sure. So as you mentioned, I joined the Vision Fund about 3 years ago from a career in investing at the growth stage or later stage. And I joined a platform that talked about investing $6 billion of capital a year. And I said, how extraordinary. Nobody's doing this. And to have that amount of capital is a gift. And could never have anticipated where we are today or where we have ended up after 9 months, which is $100 billion of capital. And what that means for markets is a very different thing. And so that said, I think anyone who knows or has read about Masa knows that he is not a man without ambition. And so I think this furthers the grand ambition he's had for a long time. And it is, we are on the cusp of the world changing, driven by technology. And he believes in the 30-year vision about where the world can be. And sees an opportunity to put pools of capital bigger than this to work to change and transform that world and generate meaningful returns. So it's not what I thought I'd be doing 3 years ago when I joined, but I feel really lucky to be here at this point in time. So,
you know, when you talk about a mega fund, people start thinking of Godzilla. And if there's one thing I would like you to walk away from our chat is that is not what we hope to be remembered. Every time you talk about the Vision Fund, the size is the thing that captures the imagination, 100 billion. Now, interestingly enough, the vision behind the Vision Fund from the founder has been consistent for the last 20 years. This is a man who has embraced the information revolution for 20 years and has ridden the roller coaster up and down, and never wavered in that conviction. So in many ways, within SoftBank, this almost feels anticlimactical, other than the size. And the size is just an alignment with certain LPs who, you know, for their own reasons, really are embracing. But our vision goes back straight to the founder. The founder for these last 20 years has believed that, you know, mankind, you go through certain epochs which are geometric in terms of its impact in society. Just step away slightly from money and returns for a second. We're talking about the development of civilizations, right? So whether it's certain ages, whether it's certain technologies, industrial revolution, truly today we are bearing fruit, and it's almost obvious because there are so many of the pillars have been constructed, whether it's globalization, whether it's the internet, whether it's the telecommunications. So all the infrastructure has been put in place, and now we are all just busy stitching it together so that we can replace the old economy with a new economy. And you can do that with anything. The Ubers of the world, where you get ride sharing, the concept that you don't need to own certain capital assets anymore, you can just lease them. The idea that instantaneously at our fingertips, we can get any kind of data, and more importantly, to be able to aggregate and then to analyze and then use that data for 1,000 things, from ordering pizza to opening your garage door to ensuring trillions of IoT items right off of your phone, and who knows where this goes. So now it's manifest because the foundations have been built, and we are all enjoying the benefit. But it's pioneers like our founder, amongst many others, who really put in the hard work and have stayed the course.
Yeah. We could have said that 9 months ago about all those themes you just talked about, but $31 billion later in 9 months, like the game's changed a little bit. Like, what are the rules of how the Vision Fund looks at markets? Are there, from a geographic perspective, are we thinking the world of a third, a third, a third? From the sectors, we like consumer, we like, what are the kind of the boundaries that you set out to? And then I'm going to move into organizationally how things work, but I think let's start with just kind of the things you like and the things you don't like.
I'll start, and then Lydia can follow and help me out. From what I can tell, we are really agnostic. This is not some kind of a asset management exercise in extracting returns. Remember, we are following a vision which has been long in the making, and now we are following where it blooms. So those areas that have the largest, TAM, the largest addressable wallet, obvious that we would be in that space. Those areas that can absorb the kind of capital we have, and those areas which can, at this moment in time, be the next, blossoming, if you will. So very agnostic. There's, we're not a typical fund. There isn't a pre-baked matrix that shows you diversification, et cetera, geographic or sector. Opportunity, something that aligns with our vision and has the capacity to absorb the kind of size that we have at this moment and can truly be disruptive and transformative on scale. That's what our attention's been turned to.
Yeah, I think there's not much to add to that other than at our best, we should be very selective, and there won't be many investments that rise to fitting within the formula that we're trying to construct. Today, we have the luxury of sitting at at a really open global marketplace. And so in any particular asset or business model we look at, we have the ability to go say, this is a business in the US. Let's look at the similar business model in China or in India or in Europe. And we don't have to make a play in India. We don't have to make a play in China. We can make an assessment about this is the best business or best market with this business model that we've already determined we like. And so it's a truly global platform. It's a flexible platform, as Colin said. But there won't be many assets that are large enough to warrant the size checks that we talk about deploying to generate the types of returns we seek to return.
And it feels to me like you can be extremely opportunistic. For example, I can't imagine you thought, and tell me if I'm wrong, the Uber deal was something that you could do 9 months ago. But things developed. There was obviously a lot going on at the organization. Who else could lead a $7.5 billion round into it? Do you think of flexibility as a unique part of the Vision Fund opportunity?
So let's just talk sort of tactically about it. I think, as Colin said, and I inarticulately said, Masa's had this vision for a long time. And so the vision hasn't fundamentally changed. And I've only been on the platform for 3 years. But I can tell you there are a couple of core categories that have been important to Softbank for a long time. E-commerce being one of them, and you can see that back through our Alibaba investment 25 years ago.
Which is now worth $140 billion.
Which has been a good return
pretty
for
good
us
deal.
relative to our sub $100 million of capital in. Mobility generally. So on these core categories, we know the global assets, and we've spoken to them for a long time. And I think it would not be an overstatement to say we've spoken to Uber at several points in the past. And so this is not a fast, let's jump in because we've got more capital now than we know what to do with. This is an entry point vis-a-vis a bigger global strategy, not a single asset strategy. And we see an opportunity to do it right now because all these factors are coming together at once. And so, but opportunistic, sure, around other new sectors where we spent less time, and that's why we're developing the team so we can be broader in our thinking about sectors of interest.
Let's talk a little bit about the team. Colin, because what does the team look like? If you were to not draw out an org chart, but just think about investment professionals, size of team, do you insource or outsource diligence, things like that. Take us a little bit behind the scenes, not the agenda at the partner meeting, but just kind of broad about what the organization.
Yeah, we really celebrate diversity. Look, we have a conglomerate called Softbank as a group, which obviously between the telecom business in Japan, between Yahoo Japan and our various portfolio companies, we have ARM, so we have all the technical expertise. In the Vision Fund itself, what we're looking for is investment acumen, certain sectors we have deep expertise and core competence. And the idea is that, look, Masa himself is a technologist, and he wants to bring on board given that we're at this next stage of the technological bloom, we don't know where exactly it's going to be. I used to run the entire securities unit for Deutsche Bank, and so I understand that entire ecosystem of finance, and clearly the financial markets are a very large GDP and fee pool. So before we wait for the next emergent thing, which hasn't occurred yet, there are some obvious targets that are ripe for disruption. Now, he doesn't go looking for people with a specific backdrop, but amongst the managing partners, you have a CEO, a serial CEO, who's managed run at least 12 or 13 different companies. You have myself, you have an investment banker who's an M&A specialist, and you have some enterprise software specialists. Very broad. The idea is, do you have someone who buys into and shares the conviction? We all come from different backgrounds. But if you don't really buy into information revolution, flowering around the world, this is the moment, the inflection point. If you don't buy into that, that's usually the filtration.
So Lydia, your office in the Bay Area is on Circle Star, which is where I saw Kool in the Gang when I was 10 years old. And it was really cool. It was a stage that went around and you never moved, but Kool in the Gang was always in front of you every other minute. But now it's the home of Vision Fund. How many people are in that office?
Oh, that's a good question. What do we have now?
Well,
it's growing fast.
Yesterday it was around 45, 50 people on the front office investing side. We obviously have infrastructure and support staff. Tomorrow we'll see. We are definitely adding a lot of stuff.
So that's $1 billion a person, Rev. That's not bad. So thinking about one thing we've talked about in the past, and I sense a key differentiation is time horizon. You have 3 core LPs who obviously put lots of money to work in different ways. My sense is they're not looking for returns on 5, 7, 9-year horizons. Talk about how that helps differentiate an investment strategy, knowing that the core backers of the fund are looking 10, 20, 30 years down the road versus 1, 2, 3. And specifically, not for the next markup, not for a small exit, but for materially and meaningful returns.
So we really, historically, this has been true, and I expect it won't change in the future, we really aim to invest in the companies that can be most transformational, that can be the next platforms, can be the next Tencents or Alibabas, Amazons, and those will take a long time to play out. And it takes someone with the fortitude and conviction of Masa to want to be that long-term partner and to not be looking for the investment returns the way a typical, within a 5-year horizon, the way a typical fund does. I don't know, quite honestly, I don't know how being, for the first time, an institutional investor with LPs will change that strategy. And I think that's something we have yet to see, and I'd love Colin's opinion on it, but it doesn't change the narrative for me when I'm talking to portfolio companies or potential investments, because Masa still believes, as long as you are performing to our ambition, he wants to be in you forever. And I think that's a very different mindset than as an investor on traditional institutional platforms in the past. It's just a different place to be. And of course, it's a different place from a capital perspective. And so we are positioned to be able to continue to fund the growth of those companies and to be that last pool of capital in many ways. So
I think it's very important. Look, when I was in charge of that securities unit at Deutsche Bank, one of the things I worry about our capitalistic society, besides all the other consequences, is just even from the market's perspective, there's a short-termism and the reactivity, which is very pro-cyclical. It's very unhealthy. There was a time when capital was slower, when it was more patient, and then those are times when the investment cycle was such that you can build great things over a long-term horizon, right? I'm talking about great leverage, compounded returns. We all know the most powerful force in the universe of compound interest. The problem is, maybe because of the way that we have instant gratification, and maybe because of the democratization of how we do investing, we have these very short-term kind of perspective, and that actually perverts investments, especially long-term, really deep infrastructure investments. And make no mistake, today's information revolution depends on us building those deep infrastructure the way that we used to, in the 50s when it came to the highways, and that then gave us a whole flourishing. That is required. And unfortunately, government probably can't lead that today the way it might have in the past. So there's a responsibility that's required there, and that that investment size is massive. Our 100 billion is nowhere near enough, which is why if Masa were here, we channel him. He's feeling like he doesn't have enough. And in fact, he's running out of time because he thinks that right now, in this moment, when you have all the stars aligned, is where you're laying tracks for the next, he says 300 years. I'm going to be modest and merely mortal for the next 30 years. It's going to be fine. You put in 100 billion, and I know one of the questions that usually comes out is, how are you going to exit that with the kind of return profile that you require? Well, if you are going to analyze the next year and the next 5 years and how much float there is in the public markets, then that's going to be a challenge. But if you're thinking about 30 years, 300 years, it's not a problem. You're creating universes. You're creating value. The capital markets will grow and expand. Money is a fungible unit, as some of our crypto guests, I'm sure, have explained to you the fallacy of paper money. But the size is not a problem. We don't have enough. We need to invest more. And that kind of mentality is too rare today. We're one of few, but we're hoping that that impact could be that we could catalyze a longer term perspective.
Amen, brother.
And we found a couple LPs that support it, which is different.
We'll get Masa here next year, and you can interview it. Talk a little bit, there's a lot of inside baseball. I think a lot of people just have questions. You tell me if I'm wrong on some things. You'll do public, you'll do privates. Is that right?
Yes.
Obviously, public information. How are you doing your work? Are you doing it on a proactive basis, saying, Greg, I love your company, I want to be part of it? Or is it part of a process where companies are in the process of raising, you became one of the entities that they talk to? How do you, if you look at the 15 or so deals we've seen now, you've done now, how would you kind of put those in buckets?
You would not be surprised to hear that we have pretty extraordinary deal flow at the moment.
Yeah.
There's a lot of inbound interest.
You just send it to info@visionfund.
Exactly. So
Leads.
We have not been starved for ideas or opportunities, and so I think they have fallen into two buckets in terms of the 15 deals you talk about. One of which is, what are the big core investments that we've been talking about for a long time? And I would put the Uber in there. I would put Flipkart in there. So there are assets that we've been talking about for a long time. And then there are a lot of inbound assets. And I think the question for us, if we're sifting through to find the 10 that fit out of the thousands coming in, just like anybody else does, the question for us as we expand the team is, how can we be more proactive and actually predefining what we want to be doing as opposed to being reactive? And so I think that's the goal for the next 4 to 30 years, in my mind.
Okay, what about size and scope? When you think about, look, we can't look at a company where we can't get this much ownership or this much capital in. What are those parameters look like?
I mean, $100 million check is... From us,
okay,
is the theoretical minimum size, $100 million, which obviously limits the universe.
Well, not necessarily.
That usually also...
100 on 101 post.
So 100 million minimum, I'd say that's probably not the sweet spot. So if we can get a little bit bigger. And then in terms of ownership stakes, we're not in it for control. Quite the opposite. One of the secret sauces of Masa is he's a very entrepreneur-friendly partner. So a lot of people ask, what's our investment process look like? It's what you might imagine it to be. It's just scaled and bigger and more bold and more ambitious. But the one thing for sure is that no matter which investment, which geography, which sector, if we invest in you, you will meet Masa some stage. It could be in the beginning, so his calendar's crazy, and it's not necessarily a formality that has to be at the end. A lot of times it's actually before the actually formal end. Somewhere along the way, you will be vetted by Masa for the qualitative side. So we would have shredded the numbers, we would have put together the deck, he would have seen all that. To be honest, that's mundane. The chief artist, the chief technologist wants to look you in the eye and get a feel, are you the bold visionary that shares that passion or not? And sure, I guess if you are an Uber and if you don't quite have the same fire, although I'd argue they have a lot of fire, it's okay. But if he feels like he has connection, and this is where the check size, et cetera, that connection sometimes is magical, and we do make some exceptions here and there.
So other than getting to meet Masa, there's more value add that comes post investment. What are you doing from are you taking board seats as investors like we would? Do you bring in operational excellence? I know in some instances you take multiple board seats. That, and then what's kind of the, I mean, it's only been 9 months, but you've been doing it for years. What's the post-investment value that you bring to the table? Because usually you clearly are well capitalizing these companies, which we'll end with, but thinking about if I'm in either an existing investor or an entrepreneur, you come to me and want to make a deal with us, what value comes alongside the cash as well?
So I think Colin said we don't want to be a majority shareholder, and that's absolutely correct, but we're also not going to be a passive shareholder for the most part. Masa really wants, he's a deeply strategic man, and he wants to feel like we can have a say in the trajectory of businesses that are going to be transformative and maybe interconnected with other assets in the future. And so I can't think of an asset where we are seeking to own less than 20 or 30%, which generally speaking at this late stage will put us in the leadership position in the cap table. So as a result of that, we do want board seats. And as far as how do I break down my time, well, one quick thing. I mean, Masa is an entrepreneur guy. Like we seek to back the right people to build the companies. But how I see my time being allocated is how do I spend a third of my time to help these companies achieve their goals? And it truly is something I spend a lot of time on. And I think, so a subcategory that I spend a ton of time on is e-commerce. And the question is, when you are the lead investor in the biggest e-commerce platforms globally, what learnings can you take across them? And our concentration in sectors allow us to do that in a meaningful way. And that's ignoring the big strategic operating platforms and the knowledge there and the operators we have there, which are something that would take too long to describe.
Well, we're there to serve our portfolio companies. Masa's very clear, the entrepreneurs are the key. They're the ones he's betting on. They add all the value. The rest of us are there to vet, process, enable. So we will take board seats. His interactions are always, how do I give you more confidence? You got a great business model. That's why I invested in you, right? Now that I've invested in you, what did you want to do? Did you want to spend $100 million on marketing? Why don't you spend 500? Did you want to roll out, a few million units? Why don't we think about billions? So that's his contribution. Ours, especially those of us taking board seats, he'll ask us, what have you done for your portfolio company recently? So did you help them with financing? Did you make introductions? It's very benign, and it's very much flipped towards, what have you done rather than what have they done?
So two questions to close. One, because I'm really curious. Have you ever lost a deal?
I can count 2 deals in the past 3 years that we've lost to other financing sources.
I'm not going to get that out of you, though, right?
I think two. I think it's two.
I can
Yeah, I haven't.
two.
We haven't lost a deal that we since I've joined, but that's only a short time.
Yeah, I don't know if that would be appropriate to do.
Where's Primac? I almost broke.
Yeah.
I'll go into other questions and come back in a different way. Let's be honest. You've got to be overcapitalizing these companies. What's the risk of that? Assuming most of the money coming in is primary, but I'm going to assume you would prefer primary over secondary, unless you're buying out existing investors.
Yes.
But I know, and I've talked to people who know they're up against you at times. They will say, valuation's relatively similar, but you're taking more ownership. So instead of 14%, you're going for 28. So instead of 150, it's 300. That money's being spent, and as we all know, companies spend the money they have. So do you think there's risk to overcapitalizing companies, or that's just part of, you know something that we don't?
We have belief, we have conviction, and we have a 30/300 year horizon. If I told you that's how you're looking at it, we're not overcapitalized. I've been in those meetings where the entrepreneur is there looking at the next 3 to 5 years and saying, look, I got to maintain cash flow, I got to get the EBITDA, I have to maintain covenants. Along comes someone who says, I believe in you. How many entrepreneurs say that I only want to grow up to this point? I want to be a mid-cap. How many entrepreneurs throw their lives, especially the good ones, right? Entrepreneurs want to, all of the entrepreneurs want to be the biggest thing that they possibly could, but they have to live in the real world. Moss is there to say, look, let's suspend the real world. I was once you. I want to do some good. I'm going to have return on impact. I have shareholders and stakeholders, so I have to get them their extraordinary returns. But I think the secret is your idea is awesome. You're going to be the next big thing. I'm just going to give you a little bit more confidence. I've never walked away in a meeting with Masa with any of these prospects where they walk away saying, you know what, I'm being overstuffed. They usually say, oh my goodness, give me more, because now I think I can really light it up and I can really do what I was hoping to do.
I think having a lot of money can cause a lot of sloppiness, and it is something that requires a board to be proactive about making sure you have a mature team put against that. But I do believe, given our strategy and the types of assets we like, I think we have the opportunity to create winners in a way that might not have been created in the past. So while it's probably too much capital up front, it might clear a path to a better, clearer outcome. And we'll see.
And by the way, that is why we like hyper-growth companies, because you don't want the kind where the demand curve is limited and you're forcing it. You want it so that the demand curve is steep. It's just a matter of practicalities. So we all agree that the opportunity is exponential growth. We're just helping you with acceleration.
Great. So easy. What was the name of that company again? The one? Next year.
Next year.
Well, thank you so much. This is great. I learned a lot. Hopefully you did as well. And thank you so
very
much for coming.
Thank you.